everyone. Welcome back to the new episode of Tech Behind It. Today I have Japhet, the Managing Director of Airtel Money Uganda with me. Thank you so much for joining, Japhet.
Thank you.
So we want to talk about mobile money markets here and what is it about? What is the future of mobile money markets? How does it work? So can you just brief us a little bit about the context of marketplaces, especially on mobile wallets?
Very, very interesting question. And yes, if you look at mobile money, especially in the region, and I'll talk about the region because mobile money started in this region of the East Africa in 2005 as a pilot between an MFI and Safaricom. And that time,
Yes.
the intention was actually to try and find a solution that could help the MFIs to correct the loans once they have disbursed it. But during the pilot, it was confirmed that there was more demand, there was more use case, the use case whereby the members were sending money to each other more than repaying the loan. And in 2007, if I remember very well, the M-Pesa was launched. And the message that was communicated to the public was send money home. And a young man working in Nairobi, sending money to the people in the rural areas, and this the parent will get the SMS, go to the kiosk and collect the money. It was simple and clear. And that actually triggered the innovation and the things that we have seen, because there are so many things that have happened since then. I think if you look at it from that perspective, mobile money and this trajectory has followed has been almost the same in all the market. You can actually replicate exactly what is going to happen in a new market. Mobile money has already started with people depositing money into the wallet, sending to one another and cashing out, which is traditionally the money transfer. And it's because actually the biggest need in our region, even in Uganda then, was people being able to move money from one person to another. And that has helped to build the foundation. If I look at Uganda, the same thing. Our use case that has really driven adoption is people being able to cash in, people being able to send money to one person and then being able to cash out from another location. And then, in addition to that, this became a very good distribution channel for telecoms. Whereby now airtime distribution, you know, when I was growing up, we used to have a lot of scratch cards. People will scratch the cards and, and then decisions were taken, like in Uganda, whereby the government took a decision to say, we have completed to go electronic. And today, Airtel Money is actually the airtime sales that we are doing for the Airtel Uganda is over 94% of the airtime is going through Airtel Money. So you can see that has helped almost everyone to know what mobile money is and do whatever they are doing. But the future of the business, with the time then, what we have seen is a lot of innovation coming with open APIs and the like. And today there are so many things that are being driven. But the ecosystem is no longer being driven by the telecom. The ecosystem is now being driven more by partnerships. And to me, what I've come to realize is if you look at the use cases that have been built in Airtel Money Uganda, for example, in the last 3 years, majority of them is in partnership with someone, either a financial institution or an insurance company or an aggregator. So those are the ones that are now driving the ecosystem. And mobile money has become almost a marketplace. Whereby anybody can come in, and sometimes I wonder actually whether what we sell is a service or a platform. Because at the end of the day, if you look at our role, is to connect the person who is willing to collect the money with the person who needs to pay the money. It's actually that kind of business that we are doing today. So the business has actually changed, and the trajectory is changing. There's a lot of focus, especially in our market today, to drive financial inclusion. And financial inclusion means going beyond money transfer to offering savings, offering insurance, offering credit. And credit in this market has to be democratized. It's something that it was only a preserve for a few who had collaterals. Now we need to really look at it from that landscape. And the future is too bright in the market, if you look at it from those perspectives.
And there are some markets that mobile money has done well. I know in Eastern Africa it has done well. Zimbabwe, I think it has done well. In Nigeria, however, in South Africa, however, it did not catch up as much as it caught up in the other regions of Africa. Why do you think there was a difference in the way it was taken up?
I don't know whether to actually apportion some blames or anything, but what I can tell is, this market that we are talking about, still there are people who are financially excluded. Maybe the models that have been rolled out in those markets are still not addressing the need in that society. But there are gaps. If, for example, you look at Nigeria, I'm sure I may not have the real statistics, but I'm sure there is about 50 million plus people who maybe don't have access to financial services. There's a time we did a study when I was working in Econet, and we did a case study in South Africa.
Yeah.
And actually, there are some areas that we could apportion not less than 13 million people who could not access financial services.
Yeah.
These are people working in some estates, people doing construction jobs. These people have no access to banking, and they need also to be included. So there are some opportunities in this market. Maybe the models might not be the same as what has worked in the region. I know in Airtel Money, when we got the PSP license, we got very excited, because obviously PSP license goes beyond traditional mobile money. And these PSP licenses, if you look at them, at least they enable you to invest the money that you collect in the wallet, which in other jurisdictions or in other regions we are not around to. The money is supposed to be held in the trust accounts, and there is an opportunity there to be able to actually create a model that is less costly to the customer, since now you can have alternative revenue, which is not applicable in our case. All our values are coming from transactional revenue. We don't make any money from the investment. But what I'm thinking, and this is not something to be validated, maybe we have gone to where everyone is in this market. I have a feeling if somebody was to just look at the entire model and say, why should I solve Lagos problem, for example? Lagos might not have a problem because for the last couple of years, there is a lot of digital solutions.
Yeah.
But are there some rural areas where there is no access to financial services? I believe there is a lot more. Maybe the model need to look from rural into urban rather than urban into the rural. But the challenge that we face in our models, it has always been urban influencing the rural areas. Because you can see, even if you look at how M-Pesa was launched, and then maybe people are trying to copy models that have been done in other markets. Because, human beings say it's better you copy what has worked rather than to experiment something. But in these two markets you are talking about, maybe the best option will be to look at them completely different, and it might need to require a rural-urban approach rather than urban-rural approach.
Cool. And last question, I hope you have the time. The last question is that what is your say on regulation? Who is regulating such markets? I was reading that the government had put a tax on mobile money transactions, which kind of declined the usage of mobile money in Uganda, Tanzania. And do you think that the onus of what happens with this product should stay with banks, should stay with telcos, or should it go to the government itself?
It's a very interesting question, and for me, is to balance. You remember, government has to continue to provide the services, so they need revenue. And what has happened is, with the time, there is this assumption that people who have access to mobile money or people who are included using mobile money don't pay taxes, because many people look at it from financially excluded. And obviously, when you look at it from that perspective, you see that there is an opportunity to collect some taxes from people who traditionally would not have been taxed. And I think that is what informs some of the government ideas or decisions to tax this space. But the problem is how much to tax. The taxing is not a problem, it's how much. For example, I'll give you the scenario, and the Uganda is a very good case study. I know Tanzania, they have relaxed over time the taxation because immediately they implemented the industry degree. Uganda, we started also with 1%. The government was able to consider and move it to 0.5% cash out tax. But the businesses are not degrown, but we are seeing a shift. We are seeing a very different shift, whereby people are now using more mobile banking agency services at the expense of our cash out business. Because when you push money into the bank and go to the agency bank, you are exempted from that 0.5 tax.
Okay.
But if you are using the mobile money, wallet, you have to pay the tax. So,
Okay.
so some people have discovered you can now use wallet to bank, push money to the bank and access it. So there is already a bypass. And our appeal to the government of Uganda, and we did that, we need a presentation to the finance committee during this budget making process. We actually appealed to them to consider extending this to all digital channels. That means also agency banking being included, and bringing it down from 0.5 to 0.3. By doing that, the tax, obviously the field will be a bit level, plus also the government revenues will not come down. Because what we don't want to advocate is government collecting less. Because if they collect less, then road networks will be a disaster, security will be a disaster. So we appreciate the tax, but sometimes when you make it even and you make the field a bit level, then it helps to drive financial inclusion. 0.5 is quite pricey because it's quite 0.5% of the value. And you see, the other day I was analyzing our charges. In a transaction where we charge 12,500 shillings, for example, Uganda shillings, that will be roughly $3. Our component has a cash-in cost, it has a cash-out cost of that 12,000, and it has an excise duty tax of 15% from that 12,500. But then on top of that, there is 25,000, which is 0.5 tax for cash out. So if you look at it, it becomes extremely expensive. It actually becomes more than $10 transaction, and you see that can obviously affect the use case. So I'm sure we continue to engage. We have made a lot of we have had several discussions with the Bank of Uganda, with the people in the ministry concerned, and I'm sure with the time, maybe if somebody will be able to look at the bigger picture and see that actually you can bring that tax down a bit, and then that will cause expansion of the use cases.
That's very interesting. That gives a lot of clarity. But thank you so much. I would have wanted to ask you a few more questions, but I think you're running late now, so maybe some other time, Jaffer.
Not a problem, but I will not stop without talking about this recent innovation we have done with the Yabex.
Oh yes, sure, you can.
And you know the thing is, we saw an opportunity because when we looked at our data, and it was actually informed by data, and we saw over 4 million transactions on a single day. Would fail because of insufficient funds. And that insufficient funds was like 20 shillings, Uganda shillings, which is 0.1 or 0.2 cents US. And then we said, how can we make it easier for these customers? And that is what triggered our engagement. And then I can tell you the speed at which we were able to roll out the checkout loan, which is an overdraft. For me, Yabex is commendable. And I'm saying it from the bottom of the heart because I've also seen this product taking years to develop, sometimes even taking more than 2 years. But we have been able to develop something that is completely transforming the industry. If you listen to the people share their stories of what this checkout loan has been able to do for them, you'll be surprised. The other day I was talking to a Bonda rider. These are the guys who use the motorbike to do a day-to-day running around and generating the revenue. And he gave me a very, very catchy story whereby one evening he went home and he had saved some money and kept some money aside to fuel the bike in the morning. And when he went home, the child was unwell. The money that he had saved now for the bike, to fuel the bike in the morning, and to be used to buy medicine. You know, come morning, he has no clue of what to do. He has nobody to borrow money from. Then he went to the petrol station and he was failing because he knew he had this service. I think he was almost trying it because that was his first time. And he got the message that you have insufficient funds, but you qualify for 50,000 shillings. And that's how he started his day. So now he has become very accustomed to the product. And those stories are so many that can be said about how this innovation is changing the world. And we are very excited. We believe now we have waitlisted 4.5 million customers who qualify now for the loan. And with this waitlisted base, I would really, really look for a day where over 2 million customers are able to access the loan, because these are traditionally financially excluded. People who had no dignity, they had to borrow money to buy bread. Now they can actually be able to buy bread without having to tell their neighbor that they have some money, they need some money. So for me, these are the innovations that are going to continue to drive our business going into the future.
And this is how MNOs are going to drive inclusive finance in Africa.
Exactly.
Thank you so much for your time, Jaffet. It was
you too.
lovely having you. Thank you so much.
Thank you too. Thank you very much for your time.
Yes,
Thank you.
You too.